Well, we're back with you to take a look at our market action, and let's go ahead and take a look at what's going on in the corn market first, shall we? Let's zero in on the, let's go ahead and go to the July contract. Right now on the corn, we are trading a penny and a half higher at 454 and a half. In December, 3 3/4 higher at 467 and a quarter. And let's go ahead and take a look at the soybeans. Soybeans have been firming up today. Boy, they're 13 3/4 higher now on July at 910 and a half. In November, 13 3/4 higher at 937 and a quarter. Big gains there. And I want to welcome Todd Bubba Horwitz of BubbaTrading.com to the show to talk about all this. It looks like a day of profit taking in the corn. Can you read more into it than that?
Good morning, Marlon. No, I think that, look, we've had one heck of a rally pretty much across the board, and we've expected a little bit of selling, and I don't think it's quite done yet. I would expect, another couple of percentage, maybe as much as 4 or 5% of a sell-off. But remember, we came up from corn 341. 3 weeks ago today, we were at 341. We're now at 460. So again, a little bit of a sell-off would be actually healthier for the market, and I'm looking forward to it because obviously I'd like to buy some more. I think there's a real good chance we could see a big market this year. And it wouldn't surprise me to see a 5 in front of corn, a 6 in front of wheat, and a 10 or 11 in front of soybeans. So I think that the whole market looks really solid, and I think we're going to continue to go higher. But I do believe that a pullback is much healthier at this point.
Now, wasn't there another gap on that corn chart late last week that could be in play here?
Yeah, there's always a gap that can be filled, and I think it will be. I mean, I was actually talking to somebody this morning. I think that September corn now, I would be looking at about 440 as a place to step in and buy again. Again, I'm not looking for a disastrous sell-off. I just believe that from a technical standpoint and from the conditions of being extremely overbought, that a pullback is perfectly natural and actually helps markets that are going to go higher, which I think these are, build actual strength and attract new money in to push them higher the next time up.
I've talked with some analysts that say, well, you almost have to take this afternoon's planting progress numbers with a grain of salt because we're at that point in the season where it's unusual. The survey takers, they ask a farmer, well, are you going to plant any more? And the farmer says, no, I give up. I can't put in anymore. And they say, well, you're 100% done. And that would show up on the table as being 100% done, when in fact they may only have 2/3 of it in, if that. So it's hard to really read too much into this afternoon's numbers. I have to wonder if maybe more won't be read into the condition numbers.
It's always possible, which is one reason that I always warn to really follow the price action and the actual money than try to follow what these reports are. We already know, right? You heard about the big party in Southern Illinois, where a lot of the guys at a party, they're not going to plant. They're just going to try to take the insurance. So again, these reports may or may not be accurate. They may or may not have asterisks next to what has been planted based on what they were going to plant. So there's a lot of things going on here, and we know that there's some pretty bad damage out there, and it's probably going to be a little bit leaner, which is obviously another reason for higher prices here.
Wheat market is a little bit firmer here. Let's take a look at Chicago and Kansas City first. And in the Chicago wheat, we're a penny and a quarter higher at 539 3/4 on July. And likewise in Kansas City, we have a little firmer tone there. We have July up 3 at 479 and a quarter. And in the Minneapolis market, we currently have the nearby July just a penny and a quarter higher at 564 and a half. We'll come back in a moment and talk a little cattle and hog market action with Todd Bubba Horwitz right after this. I'm pleased to be joined right now by Todd Bubba Horwitz of BubbaTrading.com in Chicago, or the Chicago area there. And always a treat to visit with you, Todd, about the markets. We're going to turn our focus now to the livestock trade. And when that corn market eased up this morning, we saw the cattle market start lifting, and we'll see if it's still that way. Live cattle futures right now here, Todd, are showing August with a gain of $1.13 at 105.40, exactly $1 off of its earlier low this morning, even though it has backed up about 45 cents from its high. October up 95 at 106.42. And if you look at the feeder cattle market today, the feeders are still struggling, though. We have August down 58 cents at 134.95. That is $1 off of its earlier high. So there for a while it was a little higher, but that has given up now. September 60 lower at 135.20. October down 55. Lean hog trade is higher. We have the July up 90 at 82.25, and that important August contract, well, it's 80 cents higher at 81.42, which happens to be about $1.50 or so off of its earlier low this morning. Quite a rebound taking place right there. Big swings in the hogs, nothing new there, I guess, Todd.
No, not really, Marlon. I think, you know, when we look at it, I mean, I think that the cattle markets are trying to find a bottom, and I think they may have done so. You know, obviously feeders are struggling a little bit because of corn, but I think, you know, obviously that always works itself out. And I do think that they're just showing some bottoming action. I thought it was really nice that they were down when I looked earlier about $1.20 and came all the way back to unchanged to be up a little bit. You know, fats have been relatively strong all morning. I mean, I guess I wouldn't call up 13 cents strong, but now up over $1. So I think they have shown a bottoming process. I think hogs are at a must-hold area. If the hogs don't hold up in these levels, you know, we're already into that backwardation going into October, December from here, which is typical this time of year. And I think if they don't hold this 80, 81 level in August, I think it could get ugly there. Again, we've had the big talk of the swine flu and all the other things, but all that's pretty much been priced in, and the markets are kind of weak since then. So to me, cattle's, I think, time to make a bottom. Hogs are in a very big danger spot, but could hold and go higher.
You know, the commodity fund positioning was a big story earlier this year. Where are they now in the livestock?
Well, I think they're trying to get long here. I think, you know, I'm looking for the same kind of action we ended up seeing in the grains. If you remember, we kept talking about a potential short squeeze that would happen. And I think you can see them trying to nibble here, trying to ease their way out without getting trapped. But so what I think is going to happen is what usually happens is they will get trapped down here at these bottoms. And the next thing you know, we'll have a monster rally very similar to what we saw in the grain markets, and they will get trapped on the wrong side of the market. But right now, it looks like they're trying to nibble a little bit after pounding away a couple of weeks ago. We had a couple of those forced liquidations, and all of a sudden, we stopped going down. So this is where I think we start to see the turn, and they may be the ones that are creating it, covering their shorts and trying to get out.
Interesting stuff. Very observant. All right. Thanks, Todd, for sharing that with our audience. Todd Bubba Horwitz. Like BubbaTrading.com in that Chicago area. So that's the latest.
Very good. All right. Thank you, Marlon.